finally doing it. I'm getting into real estate. Well, you picked a kind of crummy place to start. I mean, look at it. A pack of Mesozoic critters could come out of there at any minute. Good afternoon, gentlemen. I would like you to know I take great offense to that borderline derogatory statement. I'll have you know that this was my great-grandmother's house. We live in Rochester, New York, you know, with other Mesozoic critters. Tell me, where do you live again? Johnstown, Pennsylvania. And you know what? I'll leave that right there. Good day, single-cell homunculi. Raptors. Am I right? Yeah, so anyway, I don't want to hear about any investment thing you're going to tell me about. If you invested in a REIT, you might have seen a better return on your real estate. Not listening. La 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 la.
The finance geek.
Ah, yes. You look like a grown adult. So let me tell you about REITs. A REIT stands for a Real Estate Investment Trust. Acronyms are fun. They put a lot of big words into one word. If I didn't tell you what it stood for, you'd be like, that sounds like a disease you get from playing pickleball. And you wouldn't be wrong for thinking that. A REIT is a type of investment where a bunch of investors pool money together, and an investment manager goes out and purchases real estate investments on the investor's behalf. It is very similar to a mutual fund, but focus on real estate. One of the main benefits are the income and tax benefits that are unique to real estate that most investors don't have access to. Although there's a few major differences between a REIT and a mutual fund, the first is that a REIT can be structured as a limited partnership, meaning you can take on less liability and overall direct focus on the investment, which is different than a mutual fund. The downside of that is that your money can be tied up for a time in that REIT, which is why you typically have to be an accredited investor to be able to invest in the limited partnership REITs. Think of it like having some money that your dad wants to borrow and will pay you back. However, your shady Uncle Larry also wants to borrow it for something. Well, either way, your money's going to be tied up for a time, but you want to make sure that you give it to the person that will help your money have the best chance to grow. The idea of REITs were created by the US Congress of all people in the 1960s. They realized that most people do not have access to commercial real estate investment opportunities, but they wanted to make that an investment option for some people. Who cares? Who wants to invest in commercial real estate? Well, historically, real estate has been a pretty decent investment opportunity and has some beneficial tax strategies as well. The idea was to create more opportunities for commercial real estate development by having additional investors be able to invest in real estate without having to buy real estate directly. It's kind of like when a friend really wants you to see a movie that you don't really want to see. So you buy the tickets and have a body double go, and then have him tell you all the best parts. Speaking of, Big Keith, how was the Barbie movie? It had great themes about feminism and masculinity that were very measured. Although the use of horses and cowboy stuff was kind of lame, and the gynecologist joke at the end didn't really land. Thanks, Big Keith. You saved about 4 hours of my life. REITs can oftentimes provide high dividend payouts, plus potential for moderate, long-term capital appreciation. Long-term total returns of REITs tend to be similar to those of value stocks, and more than the returns of lower risk bonds, like a US Treasury, for example. Because of the strong income potential that REITs provide, they're an important investment for retirement savers and retirees that require some continuous income to sustain. And remember, there's some unique benefits and risks to investing in real estate. It's always good to know about another form of investment. I mean, imagine only eating McNuggets when there's chicken tenders and chicken fries and chicken parmesan and chicken Alfredo. All are good, but some just hit different. So what is the best way to take advantage of the opportunity? Big E, I want some tax breaks and to invest in some real estate. Sign me up. Well, there are a couple ways to take advantage of some REITs. One is to invest in a REIT mutual fund. There are some publicly traded mutual funds and exchange-traded funds that allow you to invest in some REITs. This is one of the easier, smoother ways. Another way is to reach out to your broker. Then you could potentially invest directly in some REITs as a limited partner. There are some downsides to this approach, like it may lock up your money and be more expensive, but it's still an option. And you can always reach out to your friendly neighborhood finance geek to learn more.
I won't have to. My family's been invested for 65 million years.
That's our show. Thanks for watching. And remember, REITs can potentially make you money, and you don't have to wait 65 million years for a return. We'll see you next time. That's our show. Thanks for watching. If you enjoyed this video, please consider following. And if you think we can assist you in any of your financial endeavors, please feel free to contact us. Our information is in the description below. Thank you, and we'll see you next time.